So real quick before we hop into the video, and no, I'm not going to try to sell you anything. My name's Josh. I'm the founder of Nobel Trading. I wanted to thank you for checking us out. I hope that you find something in here that's helpful for you or future you. If you look down below, I'll put some timestamps for the different topics. If you are already in Discord and you're like, when did this happen? I'm sorry, I didn't advertise it well. It's sort of intentional. Well, it was intentional. We have to, work out some kinks in the early days, and this is part of that. So it was a learning experience. I had to learn about how the voice channels work, how people can maybe navigate that. Not everyone's on a computer. Some people are on their phone. So I learned a lot, and it was really helpful. In the future, though, there'll be more advertising, more people hopefully in classes, and of course not all classes will be public. Today's currently the 10th, but by the 17th, that's 10/17/2021. The website will be live, and then the Discord will be public to everyone, and you can learn about us more on there. But in the future, if you want to know what's up or what's going on, go ahead and like the video, subscribe, ring that bell, because I will be putting out a podcast that kind of recaps some of the content that was missed in this video due to addressing a lot of people's questions. Which is fine. I want to pump out the content that you actually want. So if you got questions, please load them up in the comment section. I'll answer them on a podcast forever and always. That's kind of what we're about. And then in the Discord, we have an education center that I will infinitely build upon as well. So check us out. I hope it's helpful. Follow us on Twitter as well. And this is, again, raw footage from the classes, a good example of what they'll be like. At Nobel Trading, we also offer mentorship. Please like the video. It makes YouTube be nicer to me, or it helps them be nicer to me, and we all win. So, enjoy your course. Did I say ring that bell? Make sure it just occurred to me that our brand is Nobel Trading, but now I have to tell people to frequently ring bells. So, yeah, I'll delve into that conundrum while you enjoy your free class.
I figured it out.
Yeah. Oh, you did figure it out on mobile?
Yeah.
That's excellent. Fantastic.
Yeah, the three dots, there's a thing that says show participants without video.
Awesome.
So, we're good.
All right, so then I'm just going to go through a walkthrough of what blockchain is. What cryptocurrency, well, not more than blockchain. We're going to talk about what cryptocurrency is as a whole, as the industry. But I also want to set the framework for the cultural and the significance it brings to our time period by kind of using what I know best. And what I know best is that history does not repeat, but it tends to rhyme. And everyone's kind of aware that this is a lot like the dot-com bubble. But a lot of people only remember the negative sentiment that went with the dot-com bubble. And so I'd like to go ahead and just start with a little story just to tell everyone how the dot-com bubble actually played out. You see, in the early 1990s, there was a company called America Online that a lot of giant hedge funds and people were short on. They thought the numbers of this company didn't make sense. They didn't understand the technology of the internet, and they were trying to short it to the dirt because they thought it was going to zero because they thought the company was lying about the success they had with the technology. In the early 1990s, this rapidly changed as people began to realize that this company was the real deal, that their revenue was actually what they had claimed, and that their growth was ludicrous. Suddenly, the stock exploded, the shorts got squeezed, it hit ridiculous highs, and the entire industry exploded into what we call the dot-com bubble. And not a lot of people remember that it was with the confirmation that this was legitimate that actually caused the bubble. It was the release of the speculation and the tension around that then caused the big ramp up. And so I really want to make sure that everyone is aware of how that plays out, because I think right now, as far as cryptocurrency goes, it seems to be by all accords that we are still in that early 1990s phase, there is still rampant speculation, and we have not had that unified clarification that this is the technology of the future. It has yet to really hit that real life impact to the day-to-day person, which is what occurred in the dot-com bubble. So I think that we actually might be not quite at a top. So now breaking down cryptocurrency. Bitcoin is the one that everyone is most aware of and is the most adopted. And by adoption, what we mean by adoption is the actual use of it. A lot of these different coins might blow up in price because people are buying it, but you want to avoid what looks like a crazy cool price that might make it seem like it's being used, and you want to actually focus on what are the real world applications of this tool. Now, Bitcoin has all kinds of different faults. Now, I want to kind of point that out. This technology has faults. Yes, it's super hard to hack. Yes, it has a scarcity. Yes, it's technically even more scarce than gold. But the most important thing to me personally when I'm looking at a technology I might invest in that will never get updates is the other applications built on top of it. And that's where you really expand into the world of cryptocurrency. Bitcoin is your gold. Well, people generally understand cash was based off gold. We're going to try and not get stuck in that hole. Other than, I will deter for one moment and play a mental game with everyone, because there's still a lot of people who believe gold is better than cryptocurrencies. But let's think about the fact that gold is only scarce on Earth. Gold occurs infinitely, an infinite amount of reactions in the universe. And space travel will completely demolish the fundamentals of it being scarce. It's not scarce at all. It's constantly being created. So keep in mind that long term, we actually do need a different solution, because we use gold because it's scarce. It's not actually scarce. There's actually no mineral on Earth that's actually scarce. If we expand our horizons, we need to expand our minds of what we view as scarce, especially when you have people creating rockets that have renewable fuel. Okay. So that's how I have, in my mind, destroyed the argument of gold having any utility in the future, because it's abundant. Anything we can find is abundant. As soon as we fix space travel, you can find infinite amounts of anything. So you need something like Bitcoin to actually create actual scarcity. And then on top of that Bitcoin, we have other applications that fill the gaps that it has. Ethereum is one of many coins that is made to help make transactions easier on the Bitcoin, but it also serves as a platform for different services. Now, these services have lots of different functions where people can create what are known as NFTs, which are non-fungible tokens. They're one of one. And they can be made pretty much infinitely. Right now, we're seeing them for art. Some people are using them as tickets to shows and concerts. And some of the it's like a sale. Like you buy this, and because people resell their tickets as souvenirs. The concept exists with NFTs, and the NFT is like a product on the Ethereum blockchain, right? And Ethereum is then built on Bitcoin. So I hope everyone's keeping up with the layers that are here. So the NFT is a product offered by Ethereum, and it's secured by the service that the cryptocurrencies use, which are known as smart contracts. Smart contracts are coded contracts. They have a lot of different purposes that they can serve, but they can't be broken. When they're written, they're written. There's no manipulating blockchains. And this is what makes them super safe. And it's nearly impossible to break any of these things as well. So everything that you create in the crypto space is secured by this nearly impenetrable system that in theory should last forever. And then the smart contracts make sure that it does what it's supposed to do. It cannot be manipulated. And that's important because every currency in the globe gets corrupted and messy because governments can manipulate it. This can never be manipulated. These technologies, they exist as they are. Okay. So we kind of got that baseline, right? You have Bitcoin as your base. Then we have products like Ethereum that are built on top of that. And then those allow for different marketplaces like the NFT market, which serves for artists and stuff. But in the future, people also need to realize that this could probably will branch out to different legal processes. For instance, voting. Voting will in the future occur on the blockchain. This is an inevitability because it's the only way you can't. In a world where everyone's worried about fraudulent votes, you can't have fraudulent votes on a blockchain. It's not possible. So that's just one example of why this will get adopted. And I keep repeating over and over about how NFTs are also really important for artists. Okay, I was just looking at time. We're actually doing really well. NFTs can be coded infinitely, and they're one of one. So you can make it for anything. These are very easily made and done. So before I kind of unpack those some more, you might be wondering where you can go to actually look at these and actually look at this space. Where is all of this occurring? So if you're wanting to just buy a crypto, you can go to Coinbase or crypto.com. Recently, as you might have seen in the Discord, I have switched to a company called Gemini. I did that because of the amount of institutional interest that the company has had, the relationships they've built. I think it's important for people to realize that not all these brokerages may make it. Some of these might go under. Granted, it's really hard to do that with cryptocurrency, but they could, and that's something that you need to keep aware of. So it's very important who you deal with, whether you're dealing with cryptocurrencies or whether you're on a different marketplace just for different products made by cryptocurrencies. And again, that's the NFTs we talked about, those non-fungible tokens. Now, if you want to trade those non-fungible tokens, there's a different set of brokerages that you are going to use rather than your Coinbase and your crypto.com. For NFTs, you're going to go to an NFT marketplace, something like so the examples of that are OpenSea, Rarible, Super Rare, Foundation, Atomic Market, Myth Market, Bakery Swap, Known Origin. If you're not getting the point right now, there's a lot of them. There's a lot. And not all these will make it. And if you think that's a lot of places that sell them, know that there's a lot more people making them. They're nearly infinite. There's a lot of noise in the space. Most of these are going to be worthless and mean nothing. So how do you, let's say you're interested in the art aspect, and you're like, wait a second. Maybe it's starting to click on why this does have value. Let's forget about the fact that all humans have a tendency to collect things and social signal, and any NFT they buy is viewable to anyone through multiple different platforms. The NFTs also are the future for these artists. So major artists will come and also create the validity that the space needs to survive over the long term. And they'll do this because this is the first time they'll get properly rewarded for what they create. How quickly does cryptocurrency change value? Very rapidly and nonstop. And so that's why there's also a lot of stable coins in the space. And that's also something very important to keep in mind, as Brandon asked in the chat. By the way, if you have any questions while I'm talking, I will address those. You can type those in the call chat. And it's good Brandon said that, because if you are purchasing an NFT, keep in mind you might not want to do that while the value of Ethereum is really high, and comparative to your cash, it might not be a good time to buy. Also keep in mind, well, there's some mechanics that we're going to further explain. Actually, I should probably interrupt myself and explain those. The traffic that occurs on the blockchain, now keep in mind this is the amount of people buying and selling, right? So if 50 people are actively transacting Ethereum, there is no entity controlling this flow, right? So the system needs to power itself. To do that, you pay gas fees. These gas fees power the blockchain. So you pay for the transaction to occur because this is all powered by the people. And so some of that also goes to the company, because remember, companies are also the ones who are creating these. And a lot of them got rich simply because they owned a large portion of the coins when they were created, or dumped their entire net worth into them when they were created, as most of the legitimate ones did not have someone owning a large portion of it when it was released. But I think I covered that pretty well. I think I see Brandon's typing something, but we'll wait and see. That covers the price changes when you're shopping on the NFT markets. The NFT markets are right now mostly artists, but later we'll have other uses that go with those. So let's cover when you're shopping on these markets, you're looking through different art pieces that people have created. When you're judging the value of something, you cannot look at the actual value of it as listed, even if a transaction has already occurred. You might be tempted to see something worth 50 Ethereum and think that since someone has paid that in the past, that must be the marketplace's value of it. But you need to understand, in the early days of this marketplace, someone can simply make a second account and purchase an item from themselves and then make it seem as if the price has been inflated. This is very important that you avoid this. So how do you know what has actual value and doesn't? And I'm going to kind of understand that, you kind of have to uncover what gives any artist inherent value. And artists derive their value from their collection of work, not a single piece. If you stumble upon one piece of art that's worth a lot, and then you go and you click on the original artist who made it, and they have a massive body of work, they put out all this content, and the average price is evenly held among their productive works, that is the confirmation you would need to start dealing with those artists' pieces that they create. This type of philosophical way, yes, definitely avoid one-hit wonders. That's correct. You absolutely want to avoid one-hit wonders. Sure, there may be some one-hit wonders that hold value, but generally, know that it is a culture that you are looking for. You're looking for a healthy culture. And an artist will create a healthy culture through a massive body of work. And that will persist over time. That's the best way to navigate this. And I don't think anyone is actually out there saying that that's what you need to look for. There's another side to the NFTs, though, that I want to cover. Let's say you are an artist, and you're like, okay, that was interesting. And I kind of mentioned how this is the future of creativity. Why am I saying that? One second, let me pause for this question. When you're buying something, how does the system lock in the price if the value changes rapidly? The person selling it sets the value. Assuming you're not using stable coins, for example, buying a Tesla with Bitcoin. If the value of Bitcoin goes down, they will need to give more. If you don't have it, then you can't buy it. So I was wondering that time frame for the value of currency so you can use it. That time frame for the value of currency so you can use it, not including the additional gas fee aspect. Is it like a 5-minute window to buy it for X price? So you can afford the price range or swing. When you go to interact and go for the purchase, you pay for the price that was shown when you purchased it. Yeah, and you could also see people just start to buy and sell things on stable coins rather than using other cryptocurrencies, as they could all wildly swing. And that also might be what people start to do. Yeah, this is true. The only thing is that, well, I mean, I'm kind of unpack. You guys are kind of making me unpack a whole different conversation here. I guess I'll go ahead and do it. This is a little bit more technical. If you are not in the live call and you're watching this video, I'll try to put timestamps down below, which I probably should have said this a little sooner. The technical issue with the cryptocurrency networks. I'm sorry, I'm going to read this comment. Bitcoin tanks right before you buy a car. Yeah, that would suck. The technical issue with these cryptocurrencies is that you need to solve for the fact that as there's more traffic going on for transactions, the price, or that gas fee that I talked about, increases substantially. And that's actually the fundamental nature of how that plays out on these blockchains. And so that's the number one thing that they have to try and solve for. And that's been a huge complaint with anyone who's been working on the Ethereum blockchain for their their like NFT production or trading that they're doing. And so when it comes to stable coins, they actually might suffer even more on that because they lack the additional structure and changes that have occurred on the other blockchains. There also could be it could also be difficult to actually use a stable coin because people aren't actually keeping much money in the stable coins. And the other coins like Ethereum have staked processes, and those staked processes actually are what help lower gas fees, as it creates a treasury where no one really accesses that money, and then the blockchain can use that as its own bank. And so that is also how people trade with what you might call leverage in the crypto space. But understand, like, let's say the stock market in the future is no longer a thing and it's all crypto based. You won't see crypto based hedge funds blow themselves up because they're unable to use our traditional understandings of margin, right? You can't over leverage yourself in a system that has a solid grounding. Well, there's no nonsense with fake money. Like right now, the U.S. government and the Federal Reserve gets to play with all this fake money. They get to print stuff up and make these new debt products, and all it does is causes us more and more issues in the future. Inherently, cryptocurrencies, this is no. You can't do it. The system won't allow you. And that's yet another reason why this will persist and be adopted in the future. I see some people typing, how does government regulation affect crypto? That's a great question. So, government regulation in crypto, as it looks to be right now, could be extremely positive. Now, there's a lot of clashing heads at the Federal Reserve, but Gensler is said multiple times that he thinks that the government should actually create their own stable coin. And I'm sorry, I'm reading this comment. I agree. Okay, no. Use straight ether to buy things. It seems like it's not the best plan of attack. It's better to use stable coins for actual buying. Downsides to stable coins. Yeah, stable coins can also fail. That's another downside that you might be mentioning that I didn't touch on. Stable coins also are frequently used for yield farming, and I just completely derailed myself again because I'm going to talk about NFTs again. This is now kind of like turning to a podcast. But yield farming, careful chasing high yield returns, as those are traps. And there's a lot of people who are new to crypto and not used to stock markets. If you're a seasoned stock market trader, you know this. Companies will come up with really high dividends to try and trick money into their failing business, and then you get blown up. And it was because you're trying to chase this high yield. Yield chasing or yield farming is really popular in crypto right now. And just keep in mind, I'm going to try not to get too technical about some stuff, because this is supposed to be the intro class, but it'll just disappear. Your money will just disappear. You'll go into your wallet to set up into the yield farming, or and it will just be gone. And that's another thing to keep in mind, is that when you're working with these brokerages, crypto is hackable, very hackable. It's impossible to get to it if you don't have the actual wallet code, right? So if you lose that, I mean, it's gone. You're not getting back into it. And there's different programs and stuff built around that. But, it could also get hacked, or you could put it in a stable coin and the stable coin blows up. It is a new space. So there's going to be tons of issues like this. And in general, yeah, famous YouTuber got hacked. Yeah. Lost all his Bitcoin. Exactly. Yeah. So let's go ahead and just say, as far as risks go, for anything I talk about past this point, anything I talk about as far as risks go, any issues seen or unforeseen that can come up will only be retroactively resolved. You will not. It doesn't matter how bad if China comes up with some crazy method and spends $50 billion trying to crash Bitcoin and they successfully do it and everyone loses everything, no one is giving you your money back. You are screwed. You screwed the pooch. It's game over. So understand that is just how we operate in finances and in society. We let people gamble and kind of take risks like this, but if you get burnt, you're burnt. No one's helping you. How did the blackouts happening affect crypto? Another great question. There's currently looking to be in the future we might have an energy crisis. I've been digging into this a lot, so I'm glad you asked this question. Look at it this way. Okay, keep in mind that this technically has two different perspectives, right? Because there is still a camp of people that aren't sure if Bitcoin or cryptocurrencies are the future. If they're right, then an energy crisis is going to make it harder to use cryptocurrencies. It's going to make it harder for them to get adopted, and then it could cause the market to crash. But if you're in the camp of liking cryptocurrencies and you think they're the future, which is where I'm at, based off the adoption rate that we talked about, what that means. It means people are actually using this, and the use cases for it, they just make sense. And it brings some inherent good because it can't be manipulated. And I think that inherent good is kind of also what will drive it forward no matter what. So in an energy crisis, it just becomes more scarce, right? It's harder to mine. It's harder to get to. If anything, that should cause a massive price squeeze. Yes, price increase. It's a supply and demand effect. Could easily play out on that. And that is actually what I am expecting to happen if we see this energy crisis to continue to explode. And just so everyone's aware, that energy crisis right now might seem like something that is quickly going to alleviate in a year, but we're going to see these type of things occur more as we likely push more and more into clean energy. And this is Brandon should be definitely getting a shout out for helping enlighten me on how that would play out in the electrical engineering that goes behind that. Interesting, because it could happen. We're using more fuel because the COVID bounce and we can't keep up. Yeah, well, even more than that, these energy crises are happening because these governments are creating these clean energy incentives, right? They're saying we have to peel back how much coal we use and use clean energy sources. Well, the trade-off is that no other energy source that we use except for uranium and nuclear energy are as stable as the clean energy we use. The clean energy is, I'm not sure if I just said that right because I got distracted by the article. Yeah, so yeah, coal and nuclear are the most stable ones that we have, and the East is really the only ones that are using nuclear energy. In the West, we're still kind of off put by it because because we saw what that happened to Russia and Japan when they mismanaged it. And we've had our own smaller cases here. We're trying to avoid that. The reality is that the technology has improved a lot. You can't even really get caught up in that argument, because what we're seeing occurring is less coal, more renewable energy sources, which are inherently less stable, which give it easier opportunities for these energy crises to occur. And as that happens, you could see it have these types of effects on the cryptocurrencies where their prices start skyrocketing because they become harder to get. And for anyone who would rather own gold than cryptocurrency, as I said earlier in the podcast, infinite amounts of gold in the universe. Right? If we solve space travel, gold is not scarce at all. So, but the blockchain code is written, and you can't just find other code floating around in the universe, right? Like, we made that. It is actually scarce. It's programmed to be scarce. So, and I guess I'll go ahead and cover the last risk that some people might come up if they come across this video. They're new to cryptocurrency. They might say, well, surely, eventually, someone will hack it. And you're right. Eventually, someone surely will hack it. I've kind of dug into the engineering side of that. It involves quantum computers, something that we're so far away from. Of course, technology evolves rapidly, so that could also change rapidly. But also understand that how free market dynamics work. Yes, there's going to be tons and tons and tons of hackers trying to hack into this stuff nonstop. There will also be tons and tons and tons and tons of people who are like, I can get rich if I can create a way that makes Bitcoin extra safe. And you'll see those free market dynamics play out. And again, this is more philosophical than, let's say, mathematical, but it usually tends to be the person on the more good side of things, trying to do good, is more competent, and they usually win. So even if there is maybe some sort of instances, I do believe in people's ability and the free market's ability to solve that issue before or even after it becomes an issue. And so let's go ahead and wander on back to NFTs after I read this question. If we find a surplus of gold or a meteor somewhere and brought it back, wouldn't we treat it like diamonds, where we initially inflate the price by holding the surplus out of circulation? We initially inflate the price by holding the surplus out of circulation. I mean,
Intentionally.
Intentionally, yeah. I mean, there's so many things that could. I don't know. I don't even know if I want to speculate on that. Okay, my knee-jerk reaction is that it would depend on who's finding the gold. Because if it's like Elon Musk, he might just try to sell it off. I'm not also well affiliated with that instance of that occurring with diamonds. But okay, the other thing that's kind of plaguing my mind why I keep stuttering is because I'm thinking as well, if at that point, I think it'll be got Southern there for a moment. I am thinking well before we start to realize how insignificant gold is, or how much of a surplus there could be in space. I think well before that, we'll already have kind of deemed it as something that's not as useful as it once was. I think we'll adopt cryptocurrencies, and then later we'll find out gold's not a big deal. Or maybe philosophically we'll kind of stumble upon that thought process a little bit sooner, at least like in general population stance. But just currently think about how many things is gold used for? Jewelry, minor computing stuff. It's not used in the financial system anymore, so it's not used as a storage of value. It is the hedge against a doomsday event, but as you know, as I've covered many times before in the podcast and stuff, and people talk about that, is there's not much. If a doomsday event happens, no one's going to care about gold. Yeah, older people are just unfamiliar with crypto. That definitely seems to be. Well, look, keep in mind, people like Peter Schiff, they're super against crypto. Okay, what does that person do? What does Peter Schiff do? Well, he owns one of the largest gold trusts. So keep in mind who is giving their opinion on, who has their opinion, where their interests vested. Look at where their money's at, and then look at what they say. And then you can figure out what's actually going on. It's always important to keep that in mind. All right, so I want to get back on topic. We're gonna venture off of the gold. We're gonna go back to the NFT marketplace, and we talked about how to identify what creates a good investment for a piece of art, and we also need to cover, like, if you're on the other side of that, let's say you're an artist, you're wanting to create the art. Excuse me. You can program into that art piece a price that is derived to you. So let's say you want 3% of every future transaction with that NFT. So you sell it. Well, I'm going to say this in dollars just so it's easier for everyone to understand. Let's say you sell it for $100. You make the $100 from the sale. That person gets their nice new piece of art. And then let's say they sell it and the next person wants $1,000. And you coded into it that you get 5%. So you get $50 of that sell. And let's say that person decides to sell it again and it sells for $10,000. Again, you're going to get 5%. Now, let's go ahead and pick this up. Where does this go? Let's say that you're an artist. You're working with a labeling company. They want to put out your album. They're trying to figure out how this contract should work. How do we work the albums? Well, we have masters. Your master record, maybe the money from the streams off the master record gets split between you and the company, and that will all be delegated on a smart contract. Or if you're an artist, if you don't even work with a label anymore, and you say, you know what? Only 100 people can listen to this song. Or have, and so you might say, well, that won't work because everyone will pirate it. You're right. It won't work in keeping it exclusive, but just because you pirate it doesn't mean that you own a physical copy that can be legally proven to be your ownership of the song. Just having a pirated company has no significance, has no value. The real value comes from the fact that this, in a court of law, can be proven to be mine because of the staking that has been done on the NFT. This is also how this will eventually work its way into the insurance industry, into the legal system, into real estate. Any documents, any proof that this is owned by this person or that person will occur in the future with NFTs and with these smart contracts. This is where the space is headed. It is nearly inevitable that it heads there because of all the things you get to skip and bypass through the traditional financial system. It beelines everything, makes everything from person to person type of transaction, which means everyone benefits more and has more financial gains because of that. Where do we go to create smart contracts? Like a specific website? Are there templates? How do we create an NFT with this smart contract coding? The idea of smart contracts is great, but how do we do it? When you go to create an NFT on any of the marketplaces that we covered, you will have the ability to set these parameters. It's a very easy menu system. It'll walk you through it. If you ever used eBay or anything, it's going to feel a lot like this, other than the fact that you're going to be uploading digital content rather than physical content. And they are all going to be a little bit different, but the bigger ones, just to reiterate, OpenSea, Rarible, super rare. I think Foundation should probably belong up there. These are going to have walkthrough systems. They're going to be able to help you navigate that fairly easily. Fairly easily. Again, these are all new technologies. These are new spaces. This is going to take time to be more solidified and to work out all the kinks, basically. But that's how you would want to navigate that. And as far as like different smart contracts, because I mean, we haven't even broke down all the different coins that expand outside even the NFT market. Because you got to keep in mind some of these do functions that are so. I think I covered NFTs good enough. Person to person, you resell it, people get the value off of it. The artist can then choose different systems where they instead can put out 100 different songs. Why that's workable. It's a min system. Upload your art and select your menu preferences, then sell. Yes, that is correct. Do you think meme coins will fall off eventually? I mean, that depends, right? It depends on who made the meme coin. Like I said, these will persist based off their culture, and their culture will be set by the artist's body of work. That person produces a lot of stuff. If they made a meme thing, maybe it becomes as known as something that it signifies this time period. You don't really know. You need to reflect on the significance it has in its own little culture that it's created. And if it's, let's say, you see it passed around different names, that's another way to view that. All right. And NFTs are super exciting. It's all ownership of digital content. And Brandon's typing something. I'm going to go ahead and answer whatever question he might have. And then we're actually going to, because we've got about 15 minutes left, and we'll say we got 20 minutes left. And I have a few other things that I wanted to make sure I touched on. And we're going to drift from NFTs, even though I keep in mind anything I've talked about, they go endlessly. And it says Brandon's quit typing, but he keeps going. Okay, so anytime I'm digging in any of these, they go endlessly. So when you're hunting for these, you're going to have to learn a good amount if you want to be a serious trader in it. How do you feel about the the dupe culture? Where people's mentality is that they can't afford the name brand, so they get the closest thing that rips it off. That's a good question. I don't know if I've ventured to that thought yet. I would assume don't buy dupes. I'm gonna assume. Yeah, dupe. Yeah, I know. Duplicate.
Well, I only mention this because of the fashion industry. This is a very big thing where you can't afford Louis Vuitton, but you go, okay, I'll get this thing that looks exactly the same, and it's a third, if not a tenth of the price. Yeah. And people say, well, it works, it functions, it's it recycles fashion so quickly. Who cares about having the only one of this kind of thing? What happens with that mentality?
Yeah, I don't think that will happen because, at least early on, because these things need to. A duplicate would only persist if it becomes its own standalone, I guess, branding as its own culture. If there becomes I'm trying to think of a better way to describe this because it's a new thought. Let's say you did have a artist collection of NFTs that were your Gucci NFTs, and then let's say there was an artist who actually gained popularity who made duplicates of all the Gucci type NFTs, but they were consistently at a lower price. The thing that might occur is that the market might end up pricing them the same, or it might choose that it likes one more than the other one, right? And so then it actually might even just switch. This is a lot different from fashion. Yeah, because people might see might like something that's similar more than the duplicate. So it could start out like that and then completely swap. It's not like Gucci, right? These brands, the communities make the culture rather than someone carefully orchestrating some sort of branding. To a certain extent, they can. But as far as there are things in the NFT space that can't really be duped, though. Oh, for sure. Yeah, you can't dupe a house deed. That's for sure. Yeah, I think he just meant more in like the art space and how that, could potentially play out like the fashion space. But the thing is that you don't set prices. Like Gucci is Gucci because Gucci sets their price. But an artist can set a price but not sell anything, right? So and also the more people like something, the more it gets adapted. So the adoption is what would give it the Gucci brand, which is what would give it the price. There's not this. You see, the same branding games can't occur that occur now. You can set a high price, but if it doesn't sell, it doesn't sell. So the people buying and selling it are the ones who set the culture. Maybe there's a secondary culture, and maybe it does trade less, but it will be simply because less people use it. And that's the opposite of what occurs now. What occurs now is a more popular thing is a cheaper thing, right? Well, the more popular thing in the crypto world will be the more expensive thing. Always. That makes sense? So you can't, like, fundamentally, it won't play out the same. I'm waiting to see if you guys type anything else out. And I did want to talk about some other coins that are, well, I guess everything we've talked about, the NFT space and everything we're theorizing about it, even if the dupe culture became our space, man, even if the dupe culture became a thing in the NFT space, yeah. And everything we talked about occurs on Ethereum network. But even right now, keep in mind Ethereum has competition. Now, how do you know which one to invest in or which one to even create on? Right now, actually, the top Ethereum competitor is called Solana. And Solana, yes, the original work will always be a higher value. The more popular one will always have a higher value. Guys. Yeah. So like, let's say Walmart made a Gucci brand. The Walmart Gucci brand would be more popular because the system that creates that gauges the popularity or the desire for it off the higher price, I guess, is the best way to put it. But the way this marketplaces works is more popular something is, more expensive it becomes. So the Walmart brand is what I'm saying. The Walmart brand will be the more expensive brand in the crypto world. Does that make sense? Your second rate, more used thing will actually become more expensive than the more, I don't know, top line prestigious concept, I guess. Yeah, what can you call Gucci? Is Gucci actually even better? No, it's just like all up. It's a culture. I guess is the way to put it. But that's a small culture, so it wouldn't be worth as much as the larger cultures. Collectively, as a collective body of art, right? I'm not talking about the one piece of clothes. I'm talking collectively, which I guess that occurs, but doesn't really occur right now. We're too far on the weeds. Solana is the number one Ethereum competitor that you need to be keep an eye on. How's this competition play out? How's it work? Competitors create their own smart contracts and their own processes to compete with Ethereum. And right now, the main name of the game is who can get the cheapest transaction prices. It is important to know that Solana's transaction prices are a fraction of the ones on Ethereum right now. So why are people not? So Ethereum's gas prices can get up to $80, $90, and Solana's gas prices, the price of the actual transaction, can be pennies on the dollar. It's much cheaper. So people might be wondering why Solana's 8th, why is Ethereum 2nd, and that's the thing that I'm trying to really drive home here. This space is unique, and the fact that the culture drives the adoption of it and the culture behind Ethereum, the creators, Valitech, that's the name of the creator of Ethereum. He's created this culture that not only created a platform that has a little bit more services that are allowed that Solana does not have, but the culture there is invested in it because they've helped build it. And since they've helped build it, it has the higher adoption that persists even when competitors like Solana come around. Now, does that mean that Solana won't eventually set off Ethereum and become the dominant coin? I can't say. I don't know. But I am saying that what it would take would be more than what everyone thinks. I would think it, and I think that's why it hasn't overtaken it yet. You need to upset the culture. And so, yeah, the less important ones will get pushed out. But that's the thing. How do you decide what's less important? Let's say you're an average investor and you're trying to learn, right? Yeah. You would look at something like Ethereum. I mean, you could do this right now. I could tell you right now all the coins that will probably work out and how you find them. The smart minds in this industry will build the best products. You're going to see the same, maybe 50 people make all the best things in this space. So what you need to follow is the people. And that's what I'm trying to say, because the people make the cultures, right? So when you're hunting down in this space, the guy who made Cardano was one of the original founders for Ethereum. Okay, he took the values of that company, everything he learned there, he took it to Cardano. Now that's a leader. Tezos was made by a guy who helped work on the Litecoin stuff. You need to follow these people, the projects they work on, and from that you will find the winners. But you need to also keep an eye out for people who are going to jump from project to project, because this is what we saw in the dot-com bubble. A fake company here, fake company there, another startup here, and people will hop around trying to snag some quick money. And so you need to identify who those people are as well and avoid them. Yes, yeah, it is. It is literally like a repeat, right? And like I said in the podcast, not every startup that doesn't make money is a scam, but most of the scams are going to be startups that don't make money. So it's going to be really confusing. But if you follow the people and you identify the people with good values and morals and they're trying to actually do good and make something for the betterment of humanity, follow the projects they work on. They'll leave a very nice trail of success. And a lot of them, even if I sat in on a cryptocurrency called Numer.ai. I sat in on one of their calls, which was very interesting. And what they're doing is they're creating their own hedge fund using a cryptocurrency. And what people can do is they can stake their Numer.ai cryptocurrency and then bet on their trading strategy. And if their trading strategy does well, they get paid in the Numer.ai token for it. And when I sat on that call, it became just even more clear to me what's kind of going on in this space, as that coin is created by three young guys in their apartment, and they're sitting in a call with a bunch of traders, and the traders are literally telling them how to make their platform. And that's because they don't understand trading well enough to even set it up. They just are really good coders who were able to make a system that allowed the traders to flourish. And so everything they do from here on out is pretty much hands off. Like, they don't have, right? They just have to wait for the traders to tell them how to make it right. And so they have these meetings where the traders basically complain about stuff. They jot it down. Okay, we'll fix that. We'll try and work on that. And they're just going to try to, have a hedge fund diversified out to as many participants as possible to see if they can outperform the other hedge funds. Yeah, so how are all these cryptos different? Kind of a little question, but if you could simplify the difference between Ethereum and Bitcoin. Oh, well, that goes to the beginning of what we said, right? Bitcoin is your base. That's just a stable blockchain in the traditional sense of how people view finance. That's your gold. Ethereum is your actual currency on top of it. All right, so because Bitcoin on itself is horrible, completely not usable as a currency. That's why people built things like Litecoin or Bitcoin Cash on top of it, because it's completely unusable as a currency. It will never, ever in a million years be used as actual transactions. And let me make this clear. No one will ever, it will never, ever be used for transactions. Ever. That's why people built products on top of it. There are some people who still think that Bitcoin will be used for transactions. Let me just repeat this again. It will never, ever, 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 ever be used for transactions. That's why Bitcoin Cash exists. That's why Litecoins exist. They all operate off the blockchain. All right. Bitcoin is nothing but your Bitcoin. If we're comparing this to the dot-com bubble, Bitcoin is your actual internet, and Ethereum is the actual companies. That makes sense? Bitcoin is your internet, and then Ethereum is your AOL, which is the company that set off. That was the, America Online company. It was AOL. So, and that's what I'm looking for. I'm looking for the verification that for the mass adoption of Ethereum is the way, or even for that to just be Bitcoin. Because remember, that's the other thing. AOL, the big company that launched the dot-com bubble because it was doing well, they aren't around anymore. They were the leader. They were blowing up. Everyone's like, oh my gosh, this is actually the future. The internet's crazy. And they aren't even around anymore. They don't even exist, as do most of the companies. But when they were around, they were number one top dog. And everyone said this is the future, right? So keep in mind, Ethereum or Solana or maybe even Bitcoin may not be a thing in a few decades. Because the dot-com bubble shook out a lot. But also remember that during the dot-com bubble, you could have bought a company after the dot-com bubble exploded and everything went terrible and there was blood in the streets and no one wanted to look at their stock portfolios. They were all crying. They had lost their fortunes. The market was bloody. Everyone was panicking. They thought everything was falling apart. Oh my gosh, this technology is so far away. What are we going to do? You could have bought Amazon for $2 in that chaos. For $2. You understand that? So when this crashes, people are going to look at the prices and they're going to try to use that as an indicator of what is good or not. But the smart people are going to avoid the prices and they're going to say no matter what volatility hits this, then we are going to look at the adoption. What's actually being used. Adoption will be what drives this forward. And that's how Bezos knew Amazon would work out even after the dot-com bubble and everything flew apart. If Bitcoin is akin to the internet, wouldn't you think there's a reason that Bitcoin has the highest chance for longevity? Yeah. And that was Raoul Pal's point in his 16-page report on Bitcoin. It does seem to be that it would have the highest chance of longevity to me. Now, would it be the thing that makes you the most money? Most likely not. I think the smaller coins will probably run higher than percentage-wise. Will give better returns to Bitcoin. But like I said on the podcast, if you were scared, if there's a bearish market, yes, consolidate. Get out of the small coins as fast as you can. Go to your Bitcoin or your Ethereum or whatever. Raoul Pal and other people will tell you that you need to just dump everything into Bitcoin when you're scared. Let's keep in mind, people will be tempted to run to stable coins. When the market turns, people are going to be, and actually, we only got a few minutes left. People might be tempted to run to the stable coins when the market turns. Do not do this. They can fail. And especially when the market's crashing and they have to deal with large amounts of volume, they're even more likely to fail. And then you lose everything. The system breaks. Okay, these are not built off the same fundamentals that the blockchain is. They're not going to handle the volume. And that's also why you can even see like the DAI coin, the DAI coin, when there is massive volatility in the market, those will swing a little bit. That's scary. And the market, like we said earlier, the market naturally volatile. Like these huge price swings and stuff. People think that that is a symptom, like that's a negative. And this is a little bit more in depth. This is actually probably something that should go in the next class. But I guess as we finish up, I'll go ahead and end this with a little hint at what future classes will look like. And in future classes, I would really like to even talk about how the volatility in the cryptocurrencies is actually a feature and not like a negative thing. And the feature aspect of that is the way people are trading futures on it, the way they're leveraging themselves, because you can leverage yourself. But like I said, right, when you leverage yourself, everything needs to have something that actually physically backs it, right? You can't just make up or take out a loan or trade on a margin or anything like that. And the processes that develop that are used by other coins, like the compound coin. And so when those kind of domino effect down, like a margin call type of thing, it creates the volatility in the chain where it has to rapidly adjust to all the moving parts. And then it creates that volatility. This is a feature that is actually a positive, not a negative. Okay, now I'm reading this. In reference to the NFT convo, one of the big things in the material world is the quality of the actual item. In the digital world, it's equal. And the better programmer can have a fighting chance. The only thing you're selling is exclusivity and brand recognition and status. NFTs can look very similar in the art aesthetic. So I'm curious how these prices are determined. If the NFTs look identical or very similar, but one is wildly cheaper, and if we take the cheap benefit, well, this is what I'll reiterate again. It's the culture, right? A single piece of art, no matter how beautiful or ornate or magical it is, will be worth nothing if it's the only thing that artist produces. This is what this is what I believe to be playing out, what I see when I hunt around, and what I think will continue to play out. A great artist will have lots of great pieces of work, and that collective work will give each individual piece its value, not the single piece. The value of one piece will be derived from the collection that artist produces, not from a single piece. So one of the pieces might be worth 200 Ethereum, but that's because the entire collection totals to 200 million Ethereum, that type of thing. So if they have, 15 different pieces of art, look at the value of all of them. If just one of them's blowing up, I would be more cautious. It's just a one-hit wonder. Yes, there are one-hit wonders, but I mean, if you were gonna bet on a band right now, would you bet on someone that had a one-hit wonder, or would you bet on someone that would you bet on a Drake that's made top 150 times, or would you bet on I can't even think of a one-hit wonder. You kind of see what I'm saying? Because it doesn't matter if you find that one that lasts forever, right? Why take the extra risk in something already insanely risky and buy something on the off chance that it will somehow survive on its own and be that one-hit wonder? All right, it's 1 in a trillion chance that you actually manage that and manage to buy it cheap and it actually attains value. It's not even maybe if you're on the other side and you're one producing the art, then it's something that you can maybe strive for. But understand that the value is going to be created from the culture that you create, from the greater body of work that you create. You might have a good song, but the album's going to be what is setting the value, because it's the collection of that's going to be creating a culture, not the one piece. I hope that makes good sense, or provides a little bit more clarity. We've got about 2 minutes left, and we talked about Ethereum, the competitors Ethereum has. We kind of talked about one example of a different cryptocurrency like numer.ai and the things they do. I guess the only one I'd like to really cover that I really wanted to make a point of, do you have a step-by-step strategy guide for beginning in the crypto world with the do's and don'ts? I know we've touched on a lot of good things so far. Yes. So like right now, as I'm doing this is actually going to be used as a video that will exist on the YouTube. and then will have its own little channel in the cryptocurrency. This is not only a good way to have classes to teach people and have open discussions where people can ask questions, but this will also be content created for people who are coming in and they want to learn. This is me actively trying to do that. Trying to come up with the do's and don'ts. It's so much information, right? I could just go on forever and then be useless because it changes, because whatever particular thing I was talking about. So that's why I'm trying to stick to the more philosophical understandings of what comprises each coin outside of, like, does it have a big price action or something like that, and greater adoption of the space. So let's take another example of a coin that, before we call this, which we do, we're running over, but before I do call this, for the sake of the video, I do want to take a moment to talk about filecoin, and as an example of a completely different business that exists in the cryptocurrency world, outside of NFTs, outside of Ethereum acting as it operates on Ethereum, right? Ethereum is the platform for the businesses. This coin operates on Ethereum, and that is the moat. Okay, so if I just use that like everyone would, that'd be a clicking moment for everyone. But in stocks, when I'm investing in a stock I like it because it has a moat, and that moat means that it's hard for competitors to compete with them because they can't cross the moat. Okay, no one can compete with. Oh geez, what am I just getting myself into? No one can compete with Roku's moat because no one has the software Roku has, and their software makes it cheaper for competitors. Okay, so what's Ethereum's moat? Ethereum's moat is the amount of is the culture that Vilek and the other creators made that went with it, but also the amount of coins built on top of it. And one of those coins was the numer.ai that we talked about. But another example is filecoin. Filecoin is a cloud storage coin where people can use the excess storage on their computer to help power the network and as storage for other people. So you can rent out the extra storage on your computer to someone else. Their data comes to you encrypted, so you cannot view it, because not only is it encrypted, but you don't even get all of it. So it gets encrypted, and then it gets distributed among multiple different storage centers. This is the example I want to use because it's important to think about how impactful that is. It deplaces the fastest growing sector that exists right now, which is cloud technology. Cloud technology is internet storage. That's AWS. That's the Amazon Web Services. That's your Microsoft programs like Azure. These are completely displaced by a system that allows everyone to provide the web storage. It's very early. It needs to continue to have adoption. But this is just one example of different things that you can do with these cryptocurrencies that expands with the adoption. And as the adoption goes, the more money people make for storage and stuff, and then the more money that can be made because there's more people using it. And then it builds on itself in a positive way. You get a flywheel effect that just works. It's a very serendipitous process on how these will play out, most likely. Now, I'm not trying to indicate that filecoin will be the one who takes over this space. I understand that this is just one example of a coin that exists with lots of competition that are all trying to snag this space. They're all trying to compete for the cloud storage space. And some of them are even trying to do that process, but with computing power. So a lot of programs operate in the cloud, and you can offer your computer as an extra system to help power that process to make it even quicker. Yeah, so theoretically in this realm, someone could rent their storage and have inappropriate illegal content that is on their storage drive without them knowing, since they can't look at it due to the encryption. I mean, even more than that, no one would know. No one would know. The only other person who set it up to be stored would know. No one else would be in the slightest aware of that occurring. And that's a good point. But it's the same point. Just remember, all these federal regulators, when they talk negatively about crypto, they cite it being used for criminal activity. This is nothing new. This is cyclical. This is white noise. This is exactly what they said when the internet was the thing. It's exactly what they said when the internet came around. This fear about illegal stuff or inappropriate stuff, it's just you don't even listen to it. Warren Buffett's been going on about it. Yellen's been going on about it. This is just a symptom of us having our country run by the oldest and most outdated people. Okay, it's one of the beautiful things about blockchain is that smart contracts don't get old and outdated. They're code, so they won't age and become less effective at keeping up with the new things. Yes, it's unless they crack down it. Yes, well, no, wrong. Even if they crack down on it, because they cracked down on the internet. China cracked down on the internet. China tried to completely ban the internet. How did that go? It does not go. It doesn't work. You cannot do it. If they crack down on it, it's a buying opportunity. If they ban it, if they say you will be killed if you own cryptocurrency, it will do nothing. It will still be what dominates in the future. Just like the internet was eventually what dominated in the future. You can't, there's no combating this. We've corrupted what we use as currency because, let's end it with this. We got 5 minutes. Let me break down a philosophical thing for you guys. Money is speech. Money is speech that we use. Actually, crazy got a chance to, yes, it is crazy that we get a chance at this. Understand the inherent good. This is kind of crazy. This is a philosophical concept that I'm about to break down. This is not what you're going to hear a normal financial advisor say. But we use money as a form of speech to attribute a value to goods and services. We use money as a speech. All right. So when I purchase something, that's my speech. That's me saying that this thing or service needs to be allocated, has a price attributed with it. That is the fundamental basis for why you would have a currency at all, right? We need to have some sort of language that we use that is universal or that decides the value of things. Now, when the government dips their hands in the honey and they start changing the way we value money because they print more, they dilute it, what are they doing? They are manipulating your speech. They are making you use a different way of measuring things. It is enforced on you. You have no say in it. They just do it, and then you are forced to use this speech. In that concept, in that philosophical space, there then becomes an argument where you could say products like Bitcoin, I shouldn't call it a product, but you could say systems like Bitcoin are actually an inherent good because they disallow the human tendency to manipulate and corrupt financial systems, as we always do, as we always have. We break every financial system we've ever made. Eventually, it will be the first one. We can't break it. We made something we can't break because we know that we will break it. We love, forget printing money. Like, we also just love taking extra leverage and tons of margin, and people blow up their hedge funds and governments blow up their currencies. No more of that. That cannot occur on the blockchain. It is, therefore, an uncorrupted speech, and therefore the actual true language, which means it will eventually be what you use to uncover the true value of things. The true value, not the inflated value that we use now because our government printed our money and went off a gold standard, or any country in the world. It will be the true value because it cannot be corrupted. Adoption will be what makes this all play out, and we're already seeing it. And I think that is a great way to kind of kick it off in the crypto space. I see lots of people coming in and out and checking out the Discord. I guess they're too scared to hop in here. But that's fine. This video will be on the YouTube for them. Yeah. So I'm just waiting to see if anyone has any last comments or anything I'd like to add. I really appreciate everyone coming out. This is our first time holding this. I'm definitely, I've recorded this one. I'd like to put it in the Discord or on YouTube, but I'm also going to rewatch this to get future classes. I gotta hop out. Too much wine. Okay, well, I hope you learned a lot. I wonder if the PC culture would affect the value of cryptos based behind the people behind them. Their cryptocurrency, you can create a cryptocurrency Netflix that can't be manipulated, or you can't control what goes on there. It becomes impossible to silence people. It is the ultimate free speech. That's what I'm trying to get at philosophically. It's the ultimate free speech. PC culture will not exist in a blockchain world. It's not even a concept that could be fabricated. It does not exist. Yeah, it is beautiful. Yeah, there's no such thing as regulation on people's ideas or thoughts on a blockchain. It can't be done. And that, yeah, it's beautiful. It is beautiful. I think that's a beautiful way to end this. So I'm going to disconnect. I hope everyone has a great night. Thanks again for coming out. And I hope we have a lot of these in the future.